Stocks up for the day, bonds and gold down. You're listening to Charting Wealth's daily review for Wednesday, the 12th of December. Let's jump right into the S&P 500 on the weekly chart. Even though we're only 2 days into the week, we have a big red down candle. Now that's showing the average pace, even though the market's been up the last 2 days. Want to know more about the Heikin Ashi candlesticks? We have a great training at the website and the YouTube channel, chartingwealth.com, or just Charting Wealth for the YouTube channel on Heikin Ashi candlesticks. We see price movements below the weekly trend line. We see the price percent oscillator heading down, derivative oscillator losing downward momentum. As we focus in a little closer on the intermediate chart, we can see that on the 2-day chart, as we go into Wednesday, this is the first day of the latest 2-day candle. We appear to be going into our third down day. Now, we hesitated to actually call a crossover going down. Looks like it's trying its best to do that now. What we'll wait for is for this candle to finish drawing. Hopefully, there'll be a continued down movement, and what we will see is we'll see the derivative oscillator flip over red. We'll see the price percent oscillator still heading down. What will that mean? Well, that, of course, will mean that we'll be able to potentially do another down trade in the S&P 500. We have to have the weekly and the 2-day moving in the same direction, and that appears to be what is setting up, but we don't call it until it happens. What do we see going on with the 4-hour chart? Up in the morning, a little bit of a pullback in the afternoon. Derivative oscillator losing downward momentum, but that price percent oscillator, our main indicator, is heading down. So let's just see how things shape up on Wednesday at the close of that 2-day candle, and if we are in position to potentially look for a down trade later in the week. What's going on the Qs? That's the NASDAQ 100. It too is showing us a red down candle for the week, up considerably more than the S&P, which was up 0.02%. The Qs is up 0.33% for the day. But again, we have a weekly down candle forming, derivative oscillator losing downward momentum, price percent oscillator is still heading down. We go from the weekly to the 2-day. 2-day is still in positive territory as far as the price percent oscillator, still positive along with the derivative oscillator. And we see that the candle forming so far is a green candle. So not as much downward pressure on the Qs as we see on the S&P 500. We go into the 4-hour chart. What do we see there? Still down, really flat as far as the price percent oscillator goes, up in the morning and then sideways in the afternoon. So we'll continue to just watch and see what we see. Price movement is still below the weekly trend line. So we'll see how things set up. Looks like the S&P may be going negative quicker than the Qs as far as the potential of jumping into a trade. We go from stocks to bonds, down for the day 0.02%, just barely. But we're going into the 5th week, it looks like, of strong, in fact, this week so far, the strongest up movement we have seen in many, many, many weeks. In fact, as far back as we see on the current chart that is displayed, derivative oscillator gaining upward momentum, price percent oscillator heading up. Remember, we had that weekly vertical crossover heading up back on the week ending Friday, the 30th of November. So again, things appear to be moving up strongly in bonds. We go to the 2-day chart. What we see there is, again, after a 2-day candle, a red open box candle, again meaning some slowing movement, not a solid red down candle. We see so far the first day of the latest 2-day candle, a green open box with further up movement. Derivative oscillator gaining just a little bit of momentum. Price percent oscillator still heading up. And we look at the 4-hour chart, and of course continuing to tick up, although we do see the price percent oscillator moving over down from going up, and we see the derivative oscillator continuing to lose upward momentum. So we'll keep our eye on things, see what we see on bonds, and of course, if it opens up for us to have a potential jumping in point for an up move. We are waiting, of course, for that 4-hour chart to give us a pullback. So again, we'll continue to keep our eye on things and see what we see as these charts continue to move. If you were already, of course, in that play, then, of course, we continue to see things moving up. If you had not and you're waiting for a pullback for a jumping in point, that might open up an opportunity soon, too. But again, we'll continue to watch and see what we see. Now, lastly, what do? We always go to gold. Gold down for the day 0.12%. Going into the second week, it appears, of up movement. Derivative oscillator gaining upward momentum. That price percent oscillator is continuing to move up in gold. Remember, all the way back on the week ending the 5th of October, we had a weekly vertical crossover going up in gold. We go from the weekly to the 2-day. What do we see there? Well, of course, the 2-day crossed over going up back on the 4th of December. And so far, a red open box, meaning some pullback, not a solid red down candle, but so far forming first day of this latest 2-day candle. Let's see how that ends up coming off. Derivative oscillators lost some of its derivative oscillator continuing to move up. Price percent oscillators lost a little of its upward momentum. We'll see how that 2-day candle finishes off at the end of the market on Wednesday. And what do we see? Well, this is where it really comes to fruition. Market topped in gold back on Friday afternoon, and it's really just been steadily moving sideways and down since then. Hasn't crossed over going down. That may be happening, so we'll continue to watch and see what we see. Of course, what we've been waiting for in gold, we've been waiting for a jumping in point on an up move, and this pullback may give us that opportunity if we have a crossover going down on the price percent oscillator on that 4-hour chart, and then things move back in the up direction. Let's continue to keep our powder dry and see what we see. Folks, that's it. As we end the day on Tuesday, go into Wednesday. We thank you for being with us. If you haven't purchased our book, please do so. You'll see links in the show notes, along with, in the show notes also, links to our Patreon page if you'd like to be a Patreon sponsor and get some of those wonderful benefits at any one of the 3 levels available. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.